Good morning, everyone. Welcome back to the next lesson for business management. I hope that this format worked well for you last week. Certainly the work that I've received back from my class, people seem to understand what they're doing, so that's great. What we've got in this slide is just a wee checklist for you, and it looks as if you've got much more to do this week, but the tasks are a wee bit shorter apart from the case study. Just a reminder that on a Wednesday morning I am live on Teams for anyone who needs any help, and Miss Hydes is live on Teams on Thursday morning for that class. Remember to send any work that you've got to send to your teacher by Wednesday the 27th or the 20th of January if you're the Thursday class. So this morning we are going to continue with finance, and we are going to look at cash budgets. You may have covered some of these in S3 if you did business management, but we're going to look at it from a different point of view and maybe in a bit more depth. We are going to look at how to prepare a cash budget, the sort of things that are involved in it, and the terminology used in it. What we said in last week's lesson is really important that a business looks after its money and manages it effectively. One way of doing this is to prepare a cash budget. What a cash budget does is that it manages the cash flow of a business. Now, the cash flow is just the term used in business to demonstrate money going in and out of the business. For example, money going in would be usually from sales, and money leaving is sort of a bills and payments or paying staff wages. So what basically a cash budget does is it looks at that and calculates how much money a business would spend or would likely to have at the end of each period, and usually we do this on a monthly basis. So basically it's a planning tool, and the one thing you need to remember is a cash budget is about planning in advance what a business is planning to spend and money that they think will come into the business. So it's all about the future. It's not actually happening yet, and that's why it's used as a planning tool. So basically what a cash budget does is it allows a business to sort of look at what money will come in. That is known as receipts. Receipts tend to come from sales. Now there's two different types of sales. There is cash sales, which is when you sell something you receive cash immediately, and credit sales is when you sell goods and services and you receive the money at a later date. This can also be known as inflows, so basically it's money flowing into the business. Cash outflows or payments are things like rent, purchases or raw materials, anything that you're buying in that's allowing you to make your product to sell, or maybe you just buy a product in to resell it, like for example, boots and shampoo. So what a cash budget is doing is looking at the money going in, the inflows, and money leaving, which is classed as outflows. And this is just some examples here in this slide. Now here is an example of what a cash budget looks like. This cash budget is for 3 months, and remember, as we said earlier, a cash budget is money that you're planning in advance what you're going to spend. It's not the actual money you've got right now. It's what you believe you'll have each month in the future. So if you look at this example, we're looking at October, November and December. At the beginning of October, you have £100. You then add on all the money you received during the month from sales in this example, and then take away any money that you spend, and that would be your total payments. In this example, it's £110. You take your 110 away from your 300, and that gives you a closing balance at the end of October. So if you've got £190 in the bank at the end of October, that is what you've got at the bank at the beginning of November, and you just start the process over again. So what I'd like you to do now is I'd like you to copy that example, because by copying it helps you understand where the figures come from, and it helps you be able to talk about it in a bit more detail. You don't need to send this to your teacher, although it's a task. You just copy it out into your jotter or in the template that's been sent with this lesson. Before you read through this slide, you must have copied the example of the cash budget, because what I would like you to do now is have that in front of you when we go through each of these terms. As we've said before in business, there are terms in business that mean specific things. Now, some of these things are quite self-explanatory. As I said in the previous slide, your opening balance is the money you have at the start of the month. You would then add up all the money you received, and that's called your total receipts. And generally that just tends to be sales. That would give you the amount of money that you've got available in order to pay all your bills. And then you would add up your total payments. That would be the total amount that you've paid, all your bills, your rent, your rates, your wages, etc. And you take your payments away from your receipts, and that gives you the balance at the end of the month. So if you're completing a cash budget, have that beside you because it gives you an explanation of what each of the figures mean. What I'd like you to do now is label each of the terms with the definition beside it on the cash budget you've already copied out. I've highlighted this in blue, but it might be a good idea for you to underscore it or highlight it on your sheet because it will make it stand out and it will help you understand it. Again, you don't need to send this to your teacher. This is for you just to consolidate and understand what a cash budget looks like and where the figures come from, because that's going to become important later on. You're going to continue to use the cash budget that you copied out in the previous slides and answer these questions. This task is important because one of the things that we'll do in the future, and when you're assessed in cash budgets, is about you analysing and understanding them, so this helps you do that. So I'd like you to answer these questions, and this task you do send to your teacher. What I would like you to do now is I would like you to complete there's 2 cash budget tasks attached with this lesson. I've also attached a blank template if you would prefer to use that, or you can just copy it into your jotter if that's the method that you're going to use. Do not send this task to your teacher because at the end of the lesson I'm going to send you the solutions so that you can check that your figures are correct, which will be much easier for you rather than us correcting it and you having to go back and do that. Also, that will also help you do tasks in the future. You need to know the figures are correct when you're interpreting the cash budget. Okay. The final task of the lesson is similar to what we did last week in that we are going to provide you with a case study to do. One of the reasons that we're doing this is it gives you an opportunity to go back and really consolidate and revise what we've learned before. And we would be doing that in classes normal anyway, just it might not be in this format. However, with us having remote learning, this is the best way for you to keep doing that. It also improves your skill in tackling case studies. So again, if there is any help you need while you're doing this, please contact us in Teams or just send me an email. So by the end of the lesson, you should be able to describe why a business would use a cash budget, why it's important, examples of receipts and identify examples of payments, be able to briefly describe terminology used in a cash budget, and to be able to prepare cash budgets from information that you've been given. Remember, if there's anything you don't understand, please ask your teacher. I will be there on Wednesday morning live in Teams if you're struggling to do anything or you just need to ask a question, and Miss Hyde is available on Thursday morning for that class. Bye.